SpaceX stock just crashed below IPO price. SpaceX's stock price has dropped below its IPO price, and investors are worried. With over $100 billion in valuation, this private aerospace company's stock performance has significant implications. What does this mean for investors, and what's next for SpaceX? And the main reason for this decline is the postponed launch of SpaceX's crucial Starship mission, which was supposed to take place in early 2024. But with a new launch date set for late 2024, investors are getting nervous. For instance, in 2023, SpaceX's revenue was around $2.5 billion, with a net loss of $300 million. But in 2022, the company's revenue was $1.5 billion, with a net loss of $500 million. So what changed? The company's expenses increased by 20% in 2023, mainly due to the development of the Starship program. But short sellers are loading up against SpaceX, with over 10 million shares shorted in the past month alone. This is a significant increase from the 2 million shares shorted in the same period last year. Additionally, back in 2018, Tesla's stock price dropped by 10% after a similar production delay, but the company was able to recover and even surpass its previous stock price. Furthermore, a common misconception is that SpaceX's success is solely dependent on its Starship program. But in reality, the company has a diverse range of projects and partnerships that could drive growth, such as its contract with NASA to develop a lunar lander. But what does this mean for investors? That's what we'll explore next. But the decline in SpaceX's stock price has significant implications for investors. For example, if you invested $10,000 in SpaceX's IPO, your investment would now be worth around $8,000. That's a 20% loss in just a few months. And with the company's high valuation, investors are worried that the stock price could drop even further. But what about the investors who shorted SpaceX's stock? They're making a profit, with some short sellers making over $1 million in the past month alone. So what's the best course of action for investors? Should they hold on to their shares or cut their losses? But before we dive into that, let's look at the historical comparison. In 2020, SpaceX's stock price dropped by 30% after a similar launch delay. However, the company was able to recover and even surpass its previous stock price. For instance, in 2021, SpaceX's revenue increased by 50% to $3.5 billion, with a net profit of $100 million. Moreover, a second-order effect of the decline in SpaceX's stock price could be the impact on the company's ability to attract top talent, as a lower stock price could make it harder for the company to offer competitive compensation packages. That's what we'll explore after the break. But the part that surprised me most is what this does to your portfolio, specifically how it could trigger a ripple effect in the entire space industry, potentially impacting companies like Blue Origin and Virgin Galactic. For example, if SpaceX's stock price continues to decline, it could lead to a decrease in investment in the industry as a whole, which could have a significant impact on the stock prices of these companies. That's what we'll explore next, including a critical factor that could make or break your investment strategy. So, let's look at the historical comparison. In 2020, SpaceX's stock price dropped by 30% after a similar launch delay. However, the company was able to recover and even surpass its previous stock price. For instance, in 2021, SpaceX's revenue increased by 50% to $3.5 billion, with a net profit of $100 million. Additionally, back in 2008, during the financial crisis, many companies in the aerospace industry saw significant declines in their stock prices, but those that were able to adapt and innovate were able to recover and even thrive. For example, Boeing's stock price dropped by over 50% in 2008, but the company was able to recover and even surpass its previous stock price. But what about the misconceptions surrounding SpaceX's stock performance? Some investors believe that the company's high valuation is justified due to its innovative technology and strong management team. But others argue that the company's high expenses and lack of profitability are major red flags. Furthermore, a common misconception is that SpaceX's success is solely dependent on its Starship program. But in reality, the company has a diverse range of projects and partnerships that could drive growth. But what about the second-order effects? For example, The decline in SpaceX's stock price could have a ripple effect on the entire private aerospace industry, potentially impacting the stock prices of companies like Rocket Lab and Virgin Galactic. That's what we'll explore after the break. But what about the surprising second-order effect that could change everything, including a potential shift in the balance of power in the private aerospace industry, and how you can position yourself to take advantage of this shift? For instance, if SpaceX's stock price continues to decline, it could create an opportunity for other companies in the industry to gain market share and attract investors. That's what we'll explore next, including a specific strategy that could help you stay ahead of the curve. And the surprising second-order effect is the potential impact on the entire private aerospace industry. For example, if SpaceX's stock price continues to decline, it could lead to a decrease in investment in the industry as a whole. But what can investors do to protect themselves? One option is to diversify their portfolio by investing in other companies in the industry. For instance, investors could consider investing in companies like Blue Origin or Virgin Galactic, which have shown promising growth in the past year. Additionally, investors could consider investing in companies that provide supporting services to the private aerospace industry, such as satellite manufacturers or launch service providers. Moreover, a historical comparison can be made to the dot-com bubble, where investors who diversified their portfolios were able to weather the storm and even come out ahead. But before we wrap up, let's look at another example. In 2019, the private aerospace company, Rocket Lab, went public with an IPO valuation of $1.5 billion. However, the company's stock price has since increased by 50% due to its strong financial performance and innovative technology. So, what can investors learn from this example? That diversification and a long-term perspective are key to success in the private aerospace industry. That's what we'll summarize in the outro. So, to recap, SpaceX's stock price has dropped below its IPO price, leaving investors worried. But what can you do to protect yourself? Consider diversifying your portfolio by investing in other companies in the industry, and make sure to keep a close eye on the second-order effects that could impact the entire private aerospace industry. For example, you could consider investing in a mix of established players like Boeing and Lockheed Martin, as well as newer companies like Rocket Lab and Virgin Galactic. This is for education, not financial advice. Talk to a fiduciary for your situation. If this changed how you think about SpaceX's stock, hit subscribe. I break down one of these every week, and I'll provide you with a free resource to help you stay up to date on the latest developments in the private aerospace